Good morning, everybody. Welcome to the 14th of December, 2023. Hunter Biden does not have to go to subpoenas like the rest of us do. And, what do you say? What do you say when people are completely above the law and they don't have to follow any rules? I mean, it's just like you can run around smoking crack, you can buy, just everything. Do whatever you want.
Dude, is a lawyer considered an officer of the court?
Yes.
So that's something people don't talk about. Like, this guy's doing all this stuff. He's a lawyer. He should be disbarred.
Yes. He should have been disbarred. He should not even ever been allowed to practice law in his condition.
It's just a shame between that and all this friggin' wokeism, progressivism with all these. I got a niece who I don't even know if I'll ever speak to her again, because she's a lesbian. If I'm even allowed to say that. Now apparently her partner is trying to talk her into having the surgery, where I don't even know what the hell they do, man. They friggin' attach something to you or what?
Oh,
But
that's terrible. She shouldn't do that. That's
well,
not good for her health.
they posted all this shit on Facebook. Or sorry, I don't like to swear. They posted all this stuff on Facebook. This whole progressive thing, right? Like, they support the Palestinians, this, that, and the other thing. And dude, it's like, my stepmother is Jewish. My sisters are Jewish. My nephews and nieces are Jewish. My stepmother's father was on Schindler's List. He was him and his father were in a prison camp or a concentration camp, and his whole family, other than him and his father, were killed. He saw his sister and his mother get machine gunned to death in front of him.
Oh my
And
God.
now I have this stupid niece of mine who's never had to do anything because my brother's makes a ton of money, and she had her college completely paid for. He gave her an allowance. He pays her rent, and I don't know. It's just so frigging infuriating, and it's so embarrassing. And my brother is so ashamed of her.
Well, Mark, it's taken our country down to levels that we never thought we'd be because we're no longer proud to be Americans. I'm not proud. I volunteered to die for this place and for every one of you guys, but I'm not proud of that anymore. And it's sad. It's just really disgusting to watch the two tiers of justice. You watch one man that actually gave a crap about our country and he's being persecuted at every level. And then you've got other people that are just robbing and stealing and stuffing their pockets and they're allowed to get away with it. And it's just, there has to be a reckoning. And it's not supposed to be with bullets. It's supposed to be at the ballot box. And if the American people don't come together and vote these assholes out, we've really got to fix it.
Yeah.
Somebody's got to fix it. If the
Well,
terrorists don't do it alone, because we've got, seriously, not to stay off the market, guys, but you go back to the border and you look at that shit and how many of these people have come across that have no allegiance to this country, that are just trying to get somewhere for free and get them a free plane ticket, a $5,000 Visa card, and wherever we want to go. And it's ridiculous.
my friend said he was he was at a restaurant. He was talking to like an illegal immigrant who was like working there, and a lot of these people. I know this is maybe hard to believe. Well, I don't. Well, actually, it's probably not hard to believe. When they hear it's a free country, they think free refers to money. They don't
Yeah,
understand that free refers to like your ability to vote and have freedom. So
right. But see, we don't have the right to vote and we don't have freedom anymore. Let me tell you something, Mark. Since the Patriot Act started, which is starting to look like 9/11 was an inside job, when it starts to look at this shit and you look at everything else that's happened along the course of time, we've got a group of oligarchs in this country that have determined that they are the ones in charge and they have been pilfering us. And we have to get rid of these people. Whether they go to prison or they get removed from office, something has to happen to where this country can reestablish itself as just a moralistic place that people give a damn about each other.
well, I want to hold my breath, dude.
Sorry, now get to the market. I'll shut up.
Um, the fact that our president has an email robbing beware as I'm robbing you, be aware.
Ripping
So
you
he
off, baby.
obviously he's just mocking people, and he knew how crooked he was. And anyway, I was not in touch with the market at all yesterday because we didn't have cable, so I didn't have TV, I didn't have my internet, and then the guy came and fixed it. I don't know, around 4 or 5 o'clock. And I got to say, I've been doing this a long time, and this action yesterday is really shocking. Um, I don't even really know what to say other than as traders, if you're long, the trend is our friend, right? You just stay along and you don't question it and you ride it. But I think you need to be prepared for some kind of a quick reversal. So we can look at some inverse ETFs this morning. That would be a good idea. But anyway, so here's our S&P 500, ripped higher, and let's see the last time we were this overbought. Last time we were this overbought was September of 20, and that was, I actually remember that. That was a pretty decent size sell-off. So that was like right here. I mean, it doesn't really look that big on this scale, but at the time it was. So that was this sell-off, like right here. Right, that started right here. So that's the last time we were as overbought as we are now. So, actually, I'll just go through the sectors real quick, and then we'll look at some inverse ETFs, because I think there's going to be some trades here. I mean, this is as traders, we want market moves, and everyone's all psyched up about, oh, they're going to cut rates, they're going to cut rates, they're going to cut rates, but hey, Jax, it's not there yet, dude. We still got another 4 points to 3 points. But people are excited about, all right, well, the Fed's going to start cutting rates. But why would the Fed start cutting rates? They're starting to cut. They would cut rates because their perception is that the economy is slowing, so they need to cut rates. And the GDP in the third quarter was, I think, 5.7%. The Atlanta Fed is predicting fourth quarter GDP to be like 1.5. So that's a really steep, sell off there, or drop off. So let's just keep that in mind. But again, I always say this, and it is true, and it's not a cop out, is that it's a dangerous thing for a trader to have an opinion. Every day you should just kind of come on in and just see, like, all right, what's going on? Because if you have an opinion, especially if you vocalize it and tell your friends, you kind of get committed to it, emotionally committed to it, and it makes it hard to see things that might be contrary to your opinion. But anyway, like I said, I've been in the market here for 30 years home. I just read Heather's thing, home. 30 years home. I've been at home for 30 years. Now, I've been doing this for 30 years, and this is one of the craziest days that I can remember. So anyway, so that's our S&P. I guess we'll go look at our tech sector. I mean, this is looking good. We saw that the healthcare and the financial sector were firming up. And what I mean is that they got above this resistance and consolidated. All right, so this is kind of interesting. Let's look where healthcare is here. It's got right up to this level here, right? And this is obviously really overbought.
That's what biotechs yesterday were ripping, Mark. Look at VKTX.
What is that? VKTX?
VKTX.
VKTX. Viking Therapeutics. Yeah.
And there are others too. You look at Lilly yesterday.
This is the biotech ETF. Yeah, look at that.
It just ripped the roof off.
Well, I don't know, man. I don't know. These are the types of moves that happen either at the beginning of a rally or at the end of a rally.
There's also
aggressive buying.
There's also Beam, BEAM, Twist, TWST, and RXRX.
Yeah. All right. So anyway, let's going on that theme, right, in the biotech sector, that's part of or in the biotech industry, that's part of the healthcare sector. And as we can see, we're very overbought. But like I said, if we're traders, we gotta just, the old saying is the trend is your friend. So if you're long, you just stay long. But I would say just be ready for a quick reversal at some point. But yeah, I mean, this is incredible action. I mean, like I said, I've been doing this a long time, and yesterday was like a really crazy day, man. And I guess it's all from people are reading what Powell has to say, so forth and so on. All right, so that's that. I'm going to look at our financial sector here.
And towards the end of the show, I want to talk again about the shrink that we were talking about on the phone the other day, because I saw some numbers again last night that said it was 112 billion.
For the retail shrink?
Yeah.
Yeah. Yeah, I mean, it's not surprising because these, like when I was a security guard when I was in college a long time ago, but they told us it's like, if someone is walking out of the store with something, you just let them go, because if you hurt them, you could get sued, or you could hurt yourself. So it's really not worth it. If someone wants to buy steal $100 jacket, then you'll let them go. So I remember I used to think, like, if you had audacity, it would be really easy to be a shoplifter, right? You just go in, you just take stuff, you just walk out.
See, it's different down here, Mark. Like when I ran our store for 20 years. And when someone would steal from me, I would grab that son of a bitch and I would call the cop and I would put him in jail, even if it was a candy bar. Because you know what? You have to work for what you pay for. You have to earn that money to spend, and somebody has no right to come take that from you. And actually, it's part of God's law as well.
Yeah, well, it's not worth getting hurt,
Now, I'll beat the shit out of them.
And I worked for, it wasn't a small store, it was a corporation.
Yeah, well, I understand that. But I mean, just in general, it's not allowed down here. I mean, it may be in your larger blue cities, but in the red areas, people don't steal like that.
I would beg to differ, dude. Who are some of the biggest shoplifters are old people, and Florida's full of them.
Well, no, listen, those are kleptomaniacs. Those are people that just get off on stealing. I'm not talking about that. I'm talking about these organized things. That kind of stuff doesn't happen in these small areas. They're not going to rush into a Walmart in Chiefland, Florida, and do that. They'd get killed.
The flash, whatever.
Yeah.
All right. Anyway, so moving on here. So this is kind of interesting too, right? Financials are at a former peak as well. So healthcare is at a former peak. Financials are at a former peak. They're both overbought. Let's look at our consumer discretionary. Yeah, I got like no freaking sleep last night. My girls got home and they're up all night laughing and talking and
having fun because they miss each other. They're twinsies, dude.
Yeah, well, I had to tell them about 100 times, like, guys, shut up, I wasn't telling them to go to bed. I'm just telling them. Anyway, I was up all night, so I'm going to have to power nap at some point today. Here's another interesting thing. Look at this. So consumer discretionary is also at a former peak. So you got healthcare, financials, and consumer discretionary. It's all really overbought and all trading at levels that were former peaks. So, like I said, I think the if you're long, you just let it run. The trend is your friend. You don't question it, but just be ready for some kind of a quick turnaround. I mean, it looks like we're heading up again this morning, but who knows what the day will bring. And now, a really big driver of this, well, maybe the main driver, is look at this action here in these interest rates.
Wow.
I mean, we were below 4%. So what does this mean? This means, I guess, people are really going into bonds, but you would think people would be selling bonds and buying stocks.
You would think.
You still grabbing that bacon? Yep. Now they have a lot of these self-checkouts. Like I went to go buy some stuff for my guinea pigs yesterday, and it's a self-checkout, and there's no one there. You could just pretend you put something in. All right. Anyway,
I got a question real quick. Why don't we have self-service kiosks in government agencies? Why do we need all those people to have a bad day and then tell you, oh no, we can't help you this week? Why can't you go up and do the same thing at a government kiosk now and get rid of some of these government employees?
Because they're government.
You do it at Publix. They're making all the taxpayers can't get a job at Publix anymore because of self-service checkout. You need to do it in the government agencies.
I got to send you a picture from our post office. I just think this is so funny. There's a sign that says lunch hour 12 to 1:30.
Yeah. It's 2 hours at our post office.
All right. Anyway, yeah. So that's the government. Your
Yeah.
hour is 90 minutes.
Hmm.
So those are our yields there. All right. Let's just see what's going on in our headlines. Um, yeah. So this is everyone's like, all right. Well, we're going to cover it. So as retail traders, if you're not an options trader, you can get exposure to the downside of the market, and you can get it pretty easily. You can look at some of these ETFs. Now, this Direxon, these guys seem to have a lot of really cool ones. But let's look at some of the bear ones. In other words, the ones that will go reverse of the market. Okay, 1 second here. Bull and bear 2x ETFs. So just to kind of go through this here, you got your energy. Let's see what energy is doing actually. Yeah, look at that. See, this is kind of what we're talked about. Oil would probably get down to the high 60s and rebound. So
Hmm.
that the high 60s are important for oil because a lot of countries need oil in the high 60s to balance their budgets. So it's not a stretch of the imagination to think that there might be people out there trying to prop it up, but I don't think anyone is really big enough to do it long term. All right, natural
Jax,
gas is kind of hanging out there too. So
Jax, that's the natural. That's the sorry, I almost said natural gas. That's the AI in those things, man. I'm telling you, it scans all the groceries in the carts. They could do the same thing in government offices.
all right, so we got China, we got Europe, we got emerging markets, sector equities. All right, so you got the FAS for financials. So the FAS, FAS, and FAS, FAZ, these are ETFs that are designed to track the financial sector. The FAS is the bull one, okay? This is going to go in the same direction as the market but by about 3 times as much. FAS is going to go in the reverse direction of the market by about 3 times. In other words, if the financial sector is down 2%, this should be up about 6%. There's healthcare. I don't think they have a bearish one for healthcare. We got real estate, high beta bull, high beta bear, biotech. Okay, so here's our biotech, LABU, LABD. So the bull is LABU and the bear is LABD. Here you got your semiconductors. Wow. So I'm gonna put this on the radar screen here. So if semis are going to reverse, just keep this on the radar screen. SOXS. So first I'm going to look at the semis. I'm looking at the industry. So semiconductors are an industry within the technology sector. So we have 11 sectors, and within the sectors are the industries. So this has been, this has really been running. So if we get a reversal, and at some point, there's going to be some kind of profit taking, but just keep it on the radar screen. And as I said, the trend is your friend, so you just stay with it until it's not trending anymore. And you can look at something like this, right? All right, here's our uptrend line. Maybe breaking this uptrend line would be like the first sign that we're starting to reverse. You have to let the market tell us what to do, right? We don't want to just go out there and guess. This rally could keep going on for another, whenever, who knows, till the end of time, or we could have a pretty quick reversal. So again, as a trader, it's kind of dangerous to have an opinion. So these are Drexon. There's other ones too. There's the Pro Shares. This here SH is designed to trade inverse to the S&P 500. See how it's just
Wow.
like the opposite. So you got to look at these things too. It's not just trading vehicles. Um, you can use them to hedge. Like say you have a portfolio and you think the market's going to go down, but you don't want to sell because maybe you want to defer your taxes or whatever to the future. Well, if you put this in your account and the market goes down, this will go up. So you could use it as a hedge as well. And then you could even get kind of thoughtful with some of these energy ETFs. Like if you have natural gas and you think the price is going to go up, and your bills are going to go up, but you could buy a natural gas ETF, which is going to go up as well. So you could kind of hedge yourself. So they're not just trading vehicles; they can be used for other things as well. And when I first became a trader, these ETFs literally didn't even exist. I remember when they first brought them out. So let's look at the home builders. XHB. Yeah, another one's really ripping. So I guess Pete, the thought is, okay, well, if interest rates are coming down, people will be building more homes. Let's take a look here. All right, let's see how overbought we are here. Well, we didn't really quite get there back in January of 20. We didn't quite get there. Yeah, so I mean, the home builders are pretty much most overbought they've been in years.
Wow.
Now, let's see what happened the other times we got this overbought. All right, so the last time we were this overbought was January of 20. So this was right before the COVID crash. So the market was really the market. If COVID didn't come along, I think the market was going to go down anyway. Obviously, not by as much. But when we got into here, like January and February of 20, we started to see like Microsoft trading at one of the. Microsoft had only gotten to that valuation 3 times in its history. And as we can see, other things here were overbought. So the market was paused to go lower. And then COVID came along, and that just kind of knocked the wind out of everything. But had COVID not come along, I think we would have gone lower anyway, because I remember a lot of things were overbought. Like I said, Microsoft. Actually, let me see if I can get that here. Got this new tool where we can get some of the financials on these things here now. Let me see if I can show you what I mean. So I'm going to put in the price to earnings ratio. All right, yeah, so maybe I was thinking price to sales. But anyway, you can see how, let me get rid of this. All right, yeah, so this is our PE ratio on the bottom. Oh, no, that's price to book. That's why it doesn't look right. I'm sorry. Let me, statistics, price to price earnings ratio. Okay, let me get rid of the price to book. All right, so this is our Microsoft price to earnings ratio. And I don't know what is going on back here. Yeah, this doesn't show it the right way. Anyway, that whatever, that's 3 years ago. But we're really overbought here. Let's take a look at, oh, okay. XBH was from the boot camp. Yeah, XHB. Yeah, so, your home builders, I guess that's the thought. But I want to look at something here. I want to just, one of the things that sometimes we can look at is the way these indices are constructed. If money is going into the big stocks, it could push the benchmark up, even though most of the stocks in the index may be going down. And I'll show you a really good example of that, which we were talking about back at the time here. But this is the equal weighted NASDAQ 100. So in here, every stock has the same weighting. It's not dominated by like Microsoft and Apple. And we can see that it peaked in November of 21. The S&P peaked right around the end of December and early January. So this just shows you in November, things really kind of started falling apart. And if you look at the Qs, the same time horizon, you can see this didn't peak. Now this is the one where Apple and Microsoft dominate this. So this peaked in late December. right? So that equal weighted ETF showed us that things were kind of starting to,
To turn.
yeah, to deteriorate. So I want to look at what the Qs are versus what the Qs equal weighted are. So here's our Qs, okay, and I would assume we're overbought. And we're going to go look now at the equal weighted one. And look at that. Wow.
Wow.
So this shows us that money is flowing into a lot of other things, not just the big guys. But that's a pretty impressive move there. Anything with DNA, mRNA. But whatever, man. It's good, I guess. Shocking, but still good.
Right.
If your portfolio is going up in value. Moderna, yeah. All right, it's up about $10 here. Positive data from phase 2 study of blah, 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 blah. Trial. Moderna rises on positive trial data for melanoma vaccine. All right, well, I would say if I was in this, I would just kind of be watching this level over here. And this morning we're right down about here.
XBI, Avi asked about that earlier. I'm sorry about that, Avi.
So this is our biotech fund. And I mean, I would be looking like up around 90. See how we got these peaks there before? You tend to run into resistance at former peaks because you have this phenomena or this dynamic or whatever you want to call it of people bought up here and then the market falls apart and all of a sudden they come to regret their decision to buy. So there could be a lot of remorseful buyers who are now like looking at this thinking, all right, well, if this thing gets back up to my level, I'm going to go get out of it. So there's a good chance that there is resistance at these former peaks. And as we saw, the financials are at former peaks and healthcare is at former peaks. There's also the NASDAQ Biotech ETF, which is IBB. They're on the way to clear cancer. Yeah, it's, one day I think all diseases will probably be cured, and then we'll all just die of starvation from overpopulation
or boredom.
All right, so here's our Nasdaq Biotech, and just crazy action. I mean, I don't really remember a day like this, other than back in was it 07 or 08 when things were really going haywire, and like one day the S&P, I forget, but I think it was up 7% in one day or something like that. It's like the biggest move higher ever. All right. Anyway, let's see. ABB, LEN, Lennar, ABBV, Aviv. Yeah, I mean, here, this guy too is at a former peak. So maybe it continues to go, but I'm just saying, moves like this, there's going to be some kind of a reversal at some point. Because it's just, we get it. Not everyone's a long-term buy and hold investor, right? I mean, some people are just traders, and it's like if you're up 10% in a week or whatever, you're going to be looking for some profit-taking opportunities. But if I look at this, two things I see, all right? One is we are at this level here, okay? Former peaks. The other is that we got this gap. So if we break this resistance, meaning we trade above it, there's a good chance this makes another rapid move higher and refills this gap. Now, one of the main reasons, as we know, why we get resistance is because we have remorseful buyers trying to sell things to get out at break even. Someone buys something and it goes down, and then it finally reverses and it gets back to their level, and they want to sell. Now, when you gap through levels, meaning you don't trade at them, on this particular day we closed there and the next day we opened here, well, because there was no trading in here, there can't be anyone who bought, who wants to get out now. So this is what we say when we talk about how gaps tend to refill. They're areas or they're price levels where there's not a lot of, say, vested interest in them. Okay, there's not going to be this massive set group of sellers or remorseful buyers trying to sell. So if we break this resistance, we can make a pretty rapid move up another $5 or $6 here. Yeah, panic buying. I actually a lot of people thought that the talk used to be that the world was going to get overpopulated. But I read this, or I saw this person, I don't know, a scientist, I guess, and they're talking now about how the underpopulation could be the problem in the future, and for whatever reason, like men's like sperm counts have dropped like unbelievably
Well, have you
since
seen the young guys?
versus like 100 years ago. You also have the whole social thing, right? People used to have 8 or 10 kids. My grandparents, all four of them, had at least like 10 siblings in their family, and that just doesn't happen anymore. All right, so anyway, here's gold, and what are we doing here? All right, now keep in mind this how important this 2085 price level has been. So this was the peak back here in August of 20, as the peak in March of 22. It was the peak in May, and then we got what we call the false breakout. So this is a really good example of a false breakout. When things get above resistance, the healthy action is for them to spend a few days kind of consolidating, and that resistance converts into support. If that doesn't happen, you could get something that looks like this, where it looks like it's going to break out, but then it just really reverses and just comes all the way back. And in and of themselves, false breakouts tend to be good contrary signals, and in this case it was, right? It tells us that there's going to be more downside. And that's what happened here. But it really doesn't look like too much is going on here in gold. Let's see, so retail sales were strong. New resistance on what? Jacks. Not sure. Sometimes I just kind of lose my train of thought. Look, like here's a really good example. This is not a gap, but it's the same principle. You make a quick move going through price levels one way, you reverse and you come back to those levels. You can make a quick move going back the other way, and you can just see that right here. Quick move down, quick move up. You see a lot in healthcare too. Now you see these same things in charts of different securities, because what we're doing is we're just looking at the psychology of people, and regardless of whether it's gold or healthcare, it's the same dynamic. So we can see here like rapid move up, then we get our descending triangle, and you get the rapid move down, and then the rapid move up. See how we just blew through these price levels? But when we get to like these price levels, there's the same dynamics going on with your buyer's remorse and your seller's remorse, but you spend a lot more time at these price levels, so there's much more interest at them. All right. One of the main reasons why we get support is remorseful sellers trying to buy things back. You blast through these levels really quickly, not a lot of time to sell. So we come back and we rip lower through these price levels, and then we turn and we go up again. So how can this help us? Well, just say you're looking to trade something because it's at support. All else being equal, if it made a really quickly, and you have two stocks, right? And one of them made a really rapid, steep decline into that support, and the other one kind of sold off slowly to that support. All else being equal, the one that moved in there really quickly should probably reverse more than the one that got there slowly. So when you're kind of evaluating, like, what should I do here? Should I take position A or position B? Well, all right, well, position A really got crushed coming into the support. So if reverses, it's probably going to really come back pretty hard. Whereas if B got there slowly, then like see down here, right? So this is support. This 124 level. And this is a good example of what I'm talking about here. So you see how you get this you get this fast move lower, and then you get to support, and you get the fast move off of it. Now, had we come into this support like this, we probably would have come off of it,
Like that.
something like that. So just something to keep in mind. All right, let's see.
Mark Mulray's got a good question here.
All right, let me look at EQT first. EQT Corporation. All right, now let's take a look at this one. All right, so reversal up 3.5%. I think there's a good chance we'll probably see some resistance around here, around 38.5 if it gets higher, because there tends to be resistance at former support levels. There's people who bought back here who are going to be trying to get out at break even over here if it comes back up. Let's see, ABV. Let me see if I can see what you mean there. So the critical price level here is pretty much right where we are now, right around 154.5. So you can see how clear it was back here and here. So the way I would approach this is I would be thinking, all right, maybe if this thing gets up to 156, that would give me some conviction that we cleared this resistance. And when you trade above resistance, it's not just this symbolic thing. It tells us that the traders and investors who created the resistance with their sell orders have left the market. So anytime you take supply out of a market, it could set the stage up for a move higher, because if the buyers come in, it's like they can't find a lot of sellers. So they have to be willing to bid bid a premium to get the sellers off of the sidelines. So that's my thought on that. In terms of the larger stocks in the healthcare sector, all right, let's take a look at this. XLV, and just be positioned or just be ready, because like I said, this could reverse here because it's really overbought and it's at resistance. So if it does reverse, there's going to be stocks within this sector that move by more, and there's going to be stocks that move by less. That's just a mathematical average. So we can go to the fact sheet. Every ETF has a fact sheet, and this tells us what the holdings are. So these are the biggest stocks within this sector, and United Health Group is 10%. So that's pretty big, right, for just one stock. So in the tech sector, Microsoft and Apple together are like 45%. So it's not that big, but it is still pretty big. So let's look at UNH. All right. Oddly enough, well, I suppose it's not odd. So we're at important resistance here. See? So it doesn't really look, it didn't really make a huge move yesterday. But again, we got to resistance. Now, remember what I just said. If we get to a level quickly, we tend to reverse quickly. Like here. But here, we kind of went slowly to the resistance. So if this does reverse, it's probably going to be a slower reversal than we would see over here. So just keep that in mind. Lilly. Let's see what Lilly looks like. Yeah, I mean, it's trading right on this black line here. Now, I don't remember why we put this black line in, but it just tries to show you that this price is important here. Johnson & Johnson is next. Yeah, this looks, this doesn't look, I'm not really seeing anything here. All right, then the next is the Aviv again. So right around where we are now. Okay, So resistance back here, here, and here.
The bottom of that wick would be closing the gap, so around 160.
Yeah, I mean, around 161. Yeah, I mean,
Yeah.
I would think like if this gets to like 156, that's where I probably think about jumping in on the long side here, because we got this gap over here. So 160, 165 on ABV for resistance. I would say, well, 165 is up here. Well, it's more like 166 if we want to get really precise, because there tends to be resistance at former peaks. Okay, so yeah, so I would concur with that. And I would also think that there's going to be some resistance here as well, around 161, because there were people who bought here and then the next day the thing just fell off a cliff. And now it's like, all right, well, if it gets back up to there, you're going to have some people that are probably trying to get out. A lot of times people ask me, like, how do you pick where resistance and support is? And the answer is one of the simplest ways is just simply looking for former peaks and former bottoms. There tends to be support at former bottoms because you have people that sold at the bottom and then the shares move higher. And then those people tell themselves, I made a mistake. If this comes back, I am going to, uh, if if it gets back to my price level, I'm going to buy my shares back. So people sell, the market rallies. If it comes back down to that level that was support, you have remorseful sellers trying to buy their shares back. So this is why you tend to get support at former support levels. It's the opposite dynamic of why we get resistance at former resistance levels. And this is what people refer to as market memory. And some of these price levels that are important can be important for a long time. And I think a really good example of that is this chart of CVS, which I like showing to people because it's just a good illustration. This is an 8-year chart of CVS. And I mean, look at this. So February of 22, I mean, I remember the day actually, it was an earnings day. And we rally, and where did we hit resistance? At a peak from 8 years before. Here we can see $83 was resistance for 2 years. Here we can see this 76.50 level was resistance for a year. And then guess what? It's become resistance again. A really kind of an amazing chart is, if you look at Bristol Myers, all right? So look at this. Now, I mean, are there really people who bought back here who waited, 17 years for it to get back to the price? I mean, I don't know, man. I really don't. I would imagine that there's got to be, computerized algorithms that maybe recognize it's a former peak. But this is July of 99 and October of 99. This is August of 16, and we hit resistance at that same level. And another good example of this long-term resistance is if you look at the financial sector. I'm going to go to all here. So, all right, so this is the $31 level. This is April of 07. So this is right before the housing meltdown. And look at where we got to resistance again. November of 17 and then December of 19. So we're talking about a decade later, this price level is still important. And then look down here, right? Resistance from November of 14 to September of 16. And then we get the COVID crash. And where do we find support? Right around the level that was previously support. Now, COVID obviously was a very scary thing. And there was a lot of uncertainty. Markets don't like uncertainty. But if you put all that aside and you put the news aside and you just focus on the market principles, it's like, oh, wow, look at that. So pretend you were on an island and you didn't know that COVID was coming on. And you said, wow, something's going on. There's a big move lower here. I don't know what the news is, but I do know that we've gotten to a price level that had been important resistance. We can even look at the Dow Jones in the kind of the same light.
SPY's up 229.
All right, so here is our Dow Jones. Okay. Now look at here. This is the COVID crash. All right. So we find support right down around here. And I mean, everyone listening to me now remembers what a frightening time it was, with the uncertainty and so forth and so on. But all that aside, we found support at a level that had been important resistance for 2 years. So from December of 14 to October of 16, I guess we could call it, I don't know, 18.3. And look at where we found support. So it's not a coincidence. And I don't know. Are there really people that sold back here that waited for years and years and years to buy their positions back, or is it some kind of computerized programs that maybe recognize former peaks and former bottoms? I don't really know. But the good thing is I don't really need to know. All right, Jax. CVS 77 by Friday. That's tomorrow. It looks like I'm going to lose my SPY 475 bet. But that's okay. As a trader, it's good to be humble. 77 by tomorrow. I'm going to say no. And the reason why I say that is because I think this 76.50 level is pretty important. And so there's probably a good chance there's going to be some pretty significant resistance around here. Yeah, so will it get up there by tomorrow? I don't think so. Of course, I am the first to admit when I'm wrong. So for those of you who don't know, I would put this in here because Jax asked me if we would get to 475 by 12:23, and I said no. So still ain't there yet, man. Still got another 2 points to go. All right, anyway. So for all those who kind of came in late, I will tell you this, right? I didn't see. It was really amazing that we had such a big day, and I didn't even see it because we didn't have internet. And it's just amazing how addicted our society is. We didn't have TV, we didn't have internet, and it just makes you realize, man. It's like, geez, if the internet really went down or got hacked or whatever, you're just so freaking reliant on it. I mean, my wife works from home, I work from home. At night, we tend to watch TV together. All right. Anyway, well, hello, Carlos. Is it safe to say the market is up today? I don't know. I don't know if this is going to continue. I just think that this is such a move of such magnitude and we're so overbought that on some level there's going to be some price taking, or profit taking. But here's the thing: if you're long, you just stay long. You don't try to guess where the top is, right? This thing could go up. Who the hell knows, man? This thing could be at 500 in another week or so. But markets, there's one guarantee in a market, and that's it, is that the market or the trend will change at some time. Things are always trending either up, sideways, or down. So you watch it, and then if you start to see signs of the reversal, well, that's where you start to take action. But you got to get out of your head that you're going to get the exact top, because no one can sell at the exact top, or no one could buy at the exact bottom consistently. It just can't be done. And I think you got to put that out of your thinking, and instead of worrying about being really precise, think about making money. And I tell people that you should have some kind of an Excel sheet that has all your positions, and you should have your total equity down there somewhere, and just focus on that total equity then, that total equity number. And if you can increase your portfolio by 1 or 2% a day over the long run, that's going to be astronomical. I've seen a lot of people really get run over, or the old term is catch the fallen knife, because they just tried to guess. They tried to get the exact bottom. They didn't wait for the reversal to start. So we're not here to be completely accurate, right? Think about basketball. If the only thing that matters is who has more points on the board at the end of the game, right? It doesn't matter. Maybe one team shot 90% from the field and the other team shot 10% from the field. But if the team that shot 10% from the field has more points, they won, right?
Dude, to make the Baseball Hall of Fame, you've just got to hit 3 of 10. You got to have more than 300% on your batting average and you make the Hall of Fame. So that's 3 of 10. So you strike out 7 times.
Um, yeah, Babe Ruth struck out more times than any other player.
Yeah.
People don't know that. Yeah. Yeah, he struck out more times than any other player. People don't realize that. Anyway.
Guys, on the YouTube channel, we are actually going to throw in Mark's going to put in a video market review today, or not just today, but every day starting between 4:30 and 5 o'clock. So there'll be a video put out on the market review. So we'll give you the morning, and then we'll come in the afternoon and talk to you in the afternoon as well.
Yeah, so tell your friends, man. I want to get above. If we get above 1,000 members, I guess we start getting paid somehow. And I think we're about like 700. But it's this YouTube, man. It's so friggin' manipulated. It's like, I mean, we were adding like maybe 2 or 3 people every day, and then all of a sudden we got to the 690s, and it just stopped.
It just stopped, and then we've been at 670. Well, it's 695 for like 2 months.
Small steps, long vision. All right, so Di, I would say, so let's think about what this is, right? This is designed to move in the opposite direction of the Qs by about 3 times. I would think. Let me just confirm that. So yesterday this was down 3.7%. The Nasdaq 100. These are the 100 biggest stocks in the Nasdaq that are not financials. So see how this was down 3.7%? It's designed to move inversely about 3 times in the opposite direction. So if we do start to see some kind of a reversal going on here, this would be a way to get exposure to it, because this thing, if the market starts to fall apart, this thing is going to skyrocket. I don't think I'd get in there yet, but it's a good thing to keep on your radar screen. And then I guess the partner to this would be the T triple Qs, right? So these are designed to go in the same direction as the Qs, but by 3 times as much. See, I was up 3.5% yesterday. But yeah, I mean, I think these inverse ETFs are really, a great thing for retail investors. I mean, I know institutional investors use some of them too. We would if our benchmark was, well, the last firm I was at, I'll just give you an example. If we had a strategy that was like small cap, and say we got $100 million, a new account, and you can't just go out and buy $100 million worth of small cap stocks, because you're going to just jack everything up. And if you take too long to buy them, you're not going to get exposure. So if those stocks are going up, the benchmark could have really good performance, and you miss out. So if we would get that $100 million in, we would just buy $100 million worth of the Russell 2000 ETF, because the strategy is marked against the Russell 2000 ETF. So by going into the Russell 2000 is the strategy is judged by. That's the benchmark. The idea is we got to do better than that. But if you buy the Russell 2000 ETF and we just put that in the account, then we're going to be in line, right? So as we start to buy things, we start to sell those small cap stocks, and maybe the transition takes a month or 2 months. But because you got the ETF in there, you're not going to be lagging on the performance. Yes or no, SPY 508? I'm going to say no. Because I think that, I'm just going to say no. I think at some point there's going to be some kind of reckoning. Maybe this is just end of year stuff.
Santa Claus rally?
Yeah, it could be. I don't know. The market tends to overhype things in both directions. So I would just have your plan ready for if there is a reversal. What are you going to do? So you're not just sitting there thinking like, what should I do? You know, S triple Qs would be a good thing to look at. All right, Brandy. I'll see you later. All right. I'm going to get going unless you guys have some more questions, but let me. RX. I got to go take a nap, man. I was up all freaking night. Recursion Pharmaceuticals. Yeah, I mean, look at that, 12%. That's a pretty serious move.
I'd say.
All right, everyone. If no one has any more questions, I'm going to get going. But we will be back tomorrow morning. And
Have a lovely day, everybody.
I guess we'll see you then.
See you guys.
All right. Thanks, everyone.